Well, welcome everybody to another virtual session of Accelerate Montana's Rural Innovation Initiative. As many of you know, but for those of maybe who are on the recording or listening to the recording and maybe don't know, Accelerate Montana's Rural Innovation Initiative is funded through the EDA in a partnership with the University of Montana to bring the university's resources to bear on economic development in rural Montana. Specifically, our project is to support innovation and entrepreneurship. And we do that with a couple of different ways. One, direct coaching, support, networking, connecting people with the resources they might need or expertise they might need or mentors to be successful in their ventures. And the other way is really through ecosystem development. And that, to us, what that means is community development, really. It's, again, asking questions, bringing folks to the table like we do here on these forums to bring up topics, opportunities that maybe just educates all of us on how to move forward the entrepreneurial endeavors of people in rural Montana. So that's the goal of these forums. We've been doing them now for a couple of years, obviously last year and a half on Zoom exclusively. And today we're taking up the topic of investment crowdfunding or regulation crowdfunding. And Andrew will speak more to that. And it's a new tool. We're gonna learn about this, but I really bring in this forward because it is a brand new tool, a relatively new tool in the last number of years that allows two new things to occur. One, allows for small businesses or entrepreneurs, startups, or even existing businesses, large businesses, to raise capital from citizens that are not accredited investors. Typically, an accredited investor means you have a net worth of $1 million or more. And historically, if you did not, you could not be an investor directly in businesses. And those businesses could not come to you and say, hey, I have this business I want to start. I think I can make it run successfully, and I'll give you a return on your investment, just like we might do in the stock market. So this is, like I said, a new tool. There've been a number of questions going around in the community. You might be seeing social media posts and such. So this is a perfect opportunity, in my mind, for us as AMRII to actually bring this out and say, hey, Andrew, hey, Elvis, how's this working? And I think we're particularly lucky because Andrew Connor, who's the director of the Center for Community Ownership here in Missoula, he partnered with the national platform called Crowdfund Main Street, which is the platform and the organization that supports using this new tool to Montana and focus it on trying to support and facilitate Montana businesses in being able to use this new tool. And Elvis is actually an entrepreneur, started a business here about a year ago or more, and is launching it and has chosen to raise capital. In fact, he's the first one on this platform to do so just this last month. And it just launched right about a month ago or so. So Elvis will talk about, he'll give his pitch just so you kind of see like how he's trying to show the world what he's doing, but then talk about why and how he's chosen to use this method. So that's where we're going. I'm going to hand it over to Andrew to kick us off. So Andrew's going to present on Crowdfund Montana as well as Crowdfund Main Street and articulate sort of how this organization has come together and then how the tool is actually used. So we'll do that, and then I think we'll have about 5 minutes for immediate questions while it's fresh in your mind. Then we'll move on to Elvis. Elvis will do his pitch and presentation. Then we'll have questions for Elvis, and we'll just finish up with Q&A. So I typically try to do this fairly informally and just really open for questions. You can either put them in the chat if your audio is not working great, or that's how you want to do it, or feel free just to raise your hand at the end of each presentation or just jump right in, either way. So with that, Andrew, welcome.
Thanks. Can you all see my screen share?
Looks good.
Super. And yes, I will reiterate the last thing Carl said there. I am not sensitive to interruptions. So by all means, if you've got something that is just burning, we've got plenty of time and space here. So do not hesitate to jump in if you've got a question. So yeah, as Carl said, I'm going to give you a little bit of the story of how we came here and a little bit of info about investment crowdfunding, and then would love to hear any questions that you all have. So as Carl mentioned, I started and run the Center for Community Ownership, which is based here in Missoula, and we work everywhere. And the two kind of main threads of work that the Center for Community Ownership has is, one, if communities have a hole in their local economies, say they're missing a grocery store, and they have that need is not being filled by a chain store or a traditional investor or a traditional entrepreneur, we help those communities organize themselves to get together to create and fund a community-owned business or a community-owned enterprise to fill that hole in their local economy. And then the second thing that we do is provide a transition option for existing businesses. So if there's a business owner who's aging out or wants to retire or move on for any other reason, and they want to sell their business to the community, maybe they don't have other, people who are looking to buy a business like that in that location, or they're just oriented in that way, we provide an option for them to transition that business into community ownership so that the community keeps that businesses and the services they provide, the tax revenue, the jobs, the occupied storefronts, things like that. So that's the main work of the Center for Community Ownership, which is distinct from Crowdfund Montana. But we, through the course of working on these projects in different places, we developed a very close working relationship with Crowdfund Main Street, which, as Carl mentioned, is a national investment crowdfunding platform. And they've been great partners. Basically, they provide this service to, if you're going to do a regulation crowdfunding or investment crowdfunding offering, you have to work through one of these portals, which is approved by the SEC, regulated by the SEC and FINRA. That is where you do this. And there's several of those companies around that do this on a national level, but we really love Crowdfund Main Street because they are community oriented. They work with values aligned businesses. They're very conscientious, and just their mission and their values are very closely aligned with the Center for Community Ownership. So that's just a snapshot of their website. And this is some of the kind of businesses and offerings that they have on there. Now, I want to just take a quick minute because I know not everyone is necessarily familiar with what exactly investment crowdfunding is. So I'll start by talking about what you are very likely familiar with, which is traditional crowdfunding, which we sometimes call gift crowdfunding, reward crowdfunding, donation crowdfunding. And these are sites like you see here, Kickstarter, Indiegogo, GoFundMe. And you're probably all familiar with these, but somebody's doing something, they're recording an album, or they're trying to make a movie, or they're trying to make a product. And they basically say, we're doing this cool thing, give us money. And people give them, a bunch of different people give them money to do this thing just because they like it. They want to support it and so forth. And maybe they get a little bit something back, like maybe they get a t-shirt, or they get their name in the credits, or they get invited to a party or something like that. But with this traditional crowdfunding, important legal requirement is that they cannot sell ownership of the company. They cannot sell shares in it. They can't take loans through crowdfunding. And in any situations, they cannot give a financial return. So this is not an investment. It's a gift or a donation. 5 years ago or so, this new category called investment crowdfunding was created. So the big difference here is that in this framework of a regulated investment, you can sell shares in your company. You can borrow money in small amounts, from a bunch of different people, the same way that any crowdfunding thing works, from people in your community, from people in your network, from people and you can offer financial returns. So, Elvis will probably talk about this later in the part where Carl was saying, talking about the process, but this is a mechanism that is heavily regulated by the SEC. So the people who are raising money, the businesses that are raising capital this way, have to do a ton of disclosure. They have to give reviewed financial statements. They have to give a lot of personal disclosure about who's running the business. They have to detail the use of funds. They basically provide all this information, which you can see on their offering page, that helps you as a potential investor make an informed decision about this. So it's this process they go through, and they actually can sell equity, can issue debt. Now, why is this important? Well, first of all, it allows for much more significant raises of capital. So these are statistics that are maybe like a year or two old now, but basically in that traditional gift donation crowdfunding model, the average successful campaign raises $7,000. And with investment crowdfunding, with platforms like Crowdfund Main Street, the average successful raise is $250,000. So obviously, it's just a vastly different scale of what becomes possible when you can actually offer a true investment and offer some financial returns. There are other benefits too. Basically, this is really empowering to entrepreneurs who want to raise capital. They don't have to go with their hat in their hand to high net worth individuals and hope that they have the right friends that can write huge checks. They don't have to prove themselves to an algorithm in a bank that factors in all sorts of weird things that they might know about to determine whether they are legitimate recipients of a loan or not. They basically just have to prove to the people in their community or the people in their network that they have a good idea, that they know what they're doing, that they do a good job, and that they are a wise investment. So it puts all the power in the hands of the businesses themselves to raise capital. It also greatly broadens the pool of potential investors. So all of a sudden, there are hundreds of millions of potential people in this country who can be investors in your business because you're allowed to advertise it publicly. And as Carl said, you're allowed to solicit investment under the legally permitted terms from unaccredited investors. So anybody can be a potential investor. And actually, anybody in the world can be a potential investor. That is not as common, but it is legally possible for anyone anywhere to invest in a crowdfunding campaign that is registered in the United States. You can advertise publicly, which is a big difference. This is something that hasn't been allowed since the Great Depression, when they passed a bunch of rules to heavily restrict investment. So you can actually go on Facebook, you can send stuff up, you can hang up posters that say, we are soliciting investment, go to this link, check out the details. It also has this benefit where your investors become really dedicated customers and supporters. They are not only personally invested in you because they like what you do, but they are literally invested in you. They have a financial stake in your success. So they become major evangelists for your work and real advocates and supporters. And again, discussing the empowerment of the entrepreneur and the business owner, you set the terms of the investment. You decide what you're offering. And if you're going to offer any sort of governance control or no control or voting rights or no voting rights, whether you're offering guaranteed dividends or goal, target dividends or a revenue share, or if you're offering debt, what the percentage rates are and how long the term is and how frequent the payments are, you get to set the terms rather than having them dictated to you by a bank, by some, kind of investor that has the capacity to write you a big check and wants control in exchange. And you have this possibility to remain in control. You don't have to sell more of the business than you want. And like I said, you can set those terms. So through this partnership with Crowdfund Main Street, that we have this working relationship where we collaborate on projects, around the country. We basically got to talking and said, hey, it would be really interesting to see if we created a version of Crowdfund Main Street, a dedicated site called Crowdfund Montana, that hosts offerings for Montana-based businesses and organizations, and really tries to cultivate a community of individual investors around the state of Montana, unaccredited and accredited, who want to support Montana-based businesses and organizations. So they created Crowdfund Montana as a standalone site. So basically we could have this kind of focused, targeted attention to say, this is where you can go to look for these Montana-based businesses and organizations that are raising capital. And those businesses and organizations can say, this is where we host offerings to tap into the people in the state who are interested in investing in this kind of thing. So the site is live now. And as Carl mentioned, Elvis's organization, Pacific Northwest Rural Broadband Alliance, is the first one on the site. So you can go look at it right now. Well, not right now. Look at it in 45 minutes. And part of the idea around this too was just, we have a lot of issues with access to capital in the state. And particularly in the rural areas, we thought that this could be a really good way to create a platform to kind of start moving capital out of the urban centers and distribute it a little bit more availably across the state to places that may not have the same kind of concentrations of wealth and capital that are more easily accessed by entrepreneurs. And similarly, the offerings that go on this site, like I mentioned, can be invested in by people anywhere. So we can also attract capital from outside of the state into the state to build businesses and jobs in Montana as well. But we're not depending on that or counting on that as the way that these things need to succeed. I want to share with you just kind of some quick figures. there's a way you can look on the sort of the site that of the agency that regulates banks and look by zip code and see how much money people have deposited in bank branches in certain zip codes. And it's kind of a crude way to say how much money do people have that are available, that is available to invest, but it's decent for getting the scale of it. This is how much money is sitting in checking accounts, savings accounts, money market accounts, and CDs in the 2 zip codes that make up most of Missoula. Over $2.5 billion. And again, that's an imperfect measure of what money individuals have that they're ready to invest. Some of that's going to be in business accounts. Some of that is money that people aren't willing to part with, aren't willing to put into investment. But it's pretty liquid funds and gives you a strong sense of the scale of what could be possible if people shift their funds from sitting in a bank earning 0.06% interest in a savings account into a local investment that's actually driving, economic growth and job growth. Now, that's Missoula, and that's 2 of the wealthiest zip codes in the whole state. So you might think, well, that's kind of distorted, and that's maybe not an accurate representation of what's going on statewide. Fair enough. But if we also look at this zip code 59538, which encompasses Malta in the far northeast, and Malta has a population of just over 2,000 people, that's how much that zip code has sitting in checking accounts, savings accounts, money market accounts, and certificates of deposit. So again, even in the more rural parts of our state, there is potentially a really significant amount of liquid available capital that could be mobilized towards investing in local businesses and organizations. So the last thing that I'm going to mention is something that's going along with the launch, and this actually starts next week. So if you're interested in this, reach out to me or reach out to the email address that's on the screen there, amy@jennycasson.com. Jenny Casson is an attorney who is sort of a partner with Crowdfund Main Street, and they have this program called Angels of Main Street, which is a nationwide organization that is basically, they're trying to do a similar thing on a nationwide scale that we're doing in Montana. They're trying to cultivate a community of people who are interested in investing in values-driven, community-oriented businesses. And they're running this very specific program, which is completely free to participate in, and there's no pressure to invest or do anything else. It is strictly educational. And it's basically this due diligence group that runs for 5 or 6 weeks on Monday nights, starting this coming Monday, which is November 1st. And this is, for anyone who's interested in investing locally, there's a really cool thing to participate in. They're basically going to teach folks how to do the due diligence on investment opportunities, how to look at the disclosure statements, how to read the financial statements, how to think about whether you're willing to take this risk of making an investment. And they're actually using as a subject of this examination our offering that's on Crowdfund Montana right now, Pacific Northwest Rural Broadband Alliance. So great opportunity. Like I said, reach out to me or reach out to Amy, who's running this program, this due diligence program. Great opportunity to empower yourself with the skills you need to really feel confident in the investments that you're making, whether it's through this platform or anywhere else. So I'll stop there. This is my email address. I'll put it in the chat as well. And I'll stop sharing and open up the floor for questions.
Thanks, Andrew. Yeah, any questions? Anybody? If you're on mute, double check if you're on mute.
Sure, I have some curiosity questions, and I feel like maybe they could be answered by going to the site, but I'll just inquire if you were to, and maybe Elvis is going to share some of this as well, but are you able to provide different opportunities for different investors, or is it streamlined per investment opportunity?
There are, so the one of the biggest things that is definitely easy and possible is that you can simultaneously raise from unaccredited investors through regulation crowdfunding while accepting investment from accredited investors. So you can do those kind of things side by side. So I'm not sure if that's what you're getting at, but that is one option. It is possible. We kind of discussed this a couple of times, and I can't remember where it came down. The other thing that I'm wondering if you're asking is basically if you can offer like one class of shares for a certain price with certain terms and like another class of shares for another. That's what you're asking? Okay. That is, the funny thing is that is legally possible, but the way that the site was built actually doesn't have that built into the sort of technology of the site. So we are still kind of contending with, if we actually are faced with that situation, how we will manage it. But it is possible to offer different classes.
I just had a clarifying question. You said that we can set the terms of the investment. Does that include when a loan would be paid back? Like how far out that would start happening?
Yes.
Or if that would happen, if we could say once profitable, or is it limited to time?
We'd have to bring the attorneys in to actually discuss what the outer bounds are of what's possible, but there are definitely, we have discussed actual situations where we've talked about the payments are made annually and the first payment isn't made for like at least a year or 2 years. You know, we've definitely talked about it in a time-bound way.
Mm-hmm.
And you can decide whether you're paying back interest only and then like ballooning the principal at the end, or if you're actually going to amortize it over time. Those are different options. I can't say with complete certainty that you could say we'll pay this back as soon as we sort of are net profitable. If I had to guess, I would guess that it's possible, because the general rule is that these things are highly, highly customizable. Like there's really a lot of leeway to set those terms, but I don't know for a fact that that particular situation is. So if you were interested in pursuing that, like let's talk further and I can actually ask the attorneys and get a real answer for you rather than my half-informed speculation.
Okay, thank you.
Yeah.
Any other questions there for Andrew? Yeah,
I
Christine.
have another one, but I don't want to step on anyone else who might have one. So I can pause for a second.
I think we've got plenty of time and space. So
Okay.
Go for it.
I'm curious, Andrew, how the Center for Community Ownership makes money on this process, and then what the commitment is either from a fee standpoint or a percentage standpoint to Crowdfund Montana, or is that built into working with you?
Yeah, so the short answer is you don't have to deal with the Center for Community Ownership at all. You can go directly to Crowdfund Montana and Crowdfund Main Street and work with them. Their fee structure is 6% of the total raise, is how they do their work. Now, if you go that route, it's sort of complicated in a sense that there's sort of three, I'll say this, there's two main components of the kind of support that you'll want. There's the platform hosting, which is what Crowdfund Montana does. There's also the legal work that can be associated with preparing the offering, certain things that need to be done that are outside of the scope of what Crowdfund Montana does. So you could do that without an attorney, but you really want to work with an attorney to do that. We have kind of an arrangement established where folks who are listing on Crowdfund Montana have access to severely discounted legal support upfront to help do the work that they need to do to prepare an offering. So that's kind of a package that is available in this situation working with Crowdfund Montana, that if you just went to like another national site like WeFunder or something, you would have to go find your own attorney, pay them directly and pay way more, et cetera, than you would in this case. So there's kind of three components. There's the platform, which is Crowdfund Montana, which is 6% of the total raise. And that's kind of its own thing. And then there's the legal support that helps you actually get ready to do the listing and so forth. If you work directly with Crowdfund Montana, you have access to these sort of discounted, basically legal fees for the time being as we're in this phase. The Center for Community Ownership's role is one that is like and Elvis can speak to this because he and I have been working together for the past year. It's basically, there's a lot of work associated with making one of these offerings go. You have to get a lot of information together. You got to produce a lot of materials. You got to file a lot of documents. You got to do a lot of this. And the Center for Community Ownership's role is twofold. One is to sort of help with all that process, basically help kind of manage that whole process of getting it launched. And then also to provide support once the campaign is launched. So strategy support for the campaign, execution of the campaign, working on materials, doing outreach. So basically, we in effect work for someone like Elvis, who is doing one of these offerings to help make their campaign a success. But you are not obligated under any stretch to work with the Center for Community Ownership. We are basically just there to sort of help connect people with the platform if they're interested. And then if they want to engage us to work on that as well, we can do that. The way that we structure our fees is that we take a fee on the back end of the raise. So we basically, Center for Community Ownership doesn't take anything up front. We just get paid out of the back end. So we can talk more in the details, Christine, if you or anyone else is interested, we can talk more about exactly what that looks like. But the basic structure is you're paying an attorney up front some amount to do the work to get things launched. And then you're doing your raise plus whatever you're going to pay if you're working with us, for example, to help what you want to walk away with plus that amount plus 6%. And then once the raise is done, we get that on the back end. So that's kind of the basic fee structure.
Thank you.
Yeah, thanks, Andrew. Any other questions on that or similar? Yeah.
We're simultaneously working with a bank on loans. And so with this type of structure, do you have any experience or like have any bankers talked to you about kind of how they view this type of alternative? Like if we're going to be doing both bank loans and this, well, like how do we pitch it to the bank or ensure them that this is kind of a safe thing to do for us?
Yeah, I mean, it'd be interesting. I don't know, Carl, if you've had any conversations to this effect. I would say the main thing that feels relevant in that conversation to me, and I will shout out Jason Nitschke at the Great Falls Development Authority, because this is a point that he always makes, because this is the real value he sees in it, is that businesses that are looking for bank funding for loans, sometimes they struggle to bring sufficient equity to the table to qualify for the lending that they need. And this is actually a way for them to get enough equity investment so that they can go then get the loans that they need. And in my conversations with bankers, my sense is that they are not discriminating against what the form of that equity is. That basically, if you have that equity capital, it's as legitimate as if that was money that you just had in your bank account, that you would invested in the business. Like that it is not looked at any differently, but you certainly could ask them the question. I mean, we're a project that we're working with currently. This is their exact plan. They basically are doing a sort of a $5 or $6 million project, and they're looking to try to raise $1 million plus in equity so that they can then turn around and go get the rest of it from the bank. And we've had joint conversations with the bank, and at least their bankers were like, yeah, sounds great, no problem. So that's my understanding of it from that experience that I've had so far.
So that would be in focusing on selling equity rather than issuing loans.
In that case, yeah, if that was your strategy if you have enough equity from some other source, then you could just build up the capital stack you've got that equity. Some of it is maybe a loan through crowdfunding, and then some of it's a loan from the bank. And in that case, the bank shouldn't have any issue with it. I mean, as long as they are in, whatever position they want to be in, that's the only thing they would possibly take issue with, but that would just be up for negotiation,
Okay.
And that's something you could write into your offering documents, is what the entitlement of the people who were lending through crowdfunding, where they sort of fell in the priority.
I think that's really what it probably comes down to for the banks, is they want to make sure they get paid first, right? If something were to happen, they have access to the assets, or they're getting paid before this other group is getting paid. So you might have to do the deal first, or with the bank, talk with them first.
Make the arrangement with them first and then, yeah, raise the capital. Yeah, that seems like a reasonable thought.
But it's a great idea. Maybe we'll bring a banker or two on for another conversation on this to see if sort of talk that process out. But if there are any more questions, Elvis, I'm going to turn it over to you to give your presentation so we get a chance to hear this. So I'm just so you all know. So Elvis is going to actually give you his. It's not an elevator pitch, is it, Elvis? It's your investor pitch, right? It's the pitch of like what you're doing. Here's how to get involved. It doesn't talk about the deal specifically, but this is a great opportunity for Elvis to practice this. So our job is to help entrepreneurs. So here's one thing we're going to do is like give Elvis another opportunity to sort of put out his pitch. But then after that, we're really going to open it up and have Elvis talk about why he's chosen to use this method to raise capital, and then how he's gone about it, and whether hard parts or easy parts. So keep that in mind. And Elvis, floor is yours.
Great. Thank you. As Carl mentioned, I'm the president of the Pacific Northwest Rural Broadband Alliance. We are a nonprofit. We operate here locally, the Missoula Valley Internet Co-op. Yes, and also as Carl mentioned, so due to SEC regulations, I can't directly discuss the terms of the offering, but they are readily available on the page for anybody to view. So I will start off here with sharing my slide deck here. Can everyone see that?
That's good.
Great. Okay. Hold on a second. Let me bring up my notes here. Hold on a sec here. Sorry. Lost my notes. Okay. All right. As I mentioned, I am the president of the Pacific Northwest Rural Broadband Alliance. So I'm here to talk to you about America's broadband crisis and the solution that we provide. To start out with, for decades, Americans' access to modern broadband service has been in a really steady decline. The Pew Charitable Trust estimates that more than 60 million people currently are without home internet connections. So over the years, it's become more and more difficult for low-income families and rural communities to access modern broadband service, with over 30% of rural households that make over $75,000 a year entirely unable to get connected. The COVID epidemic really forced us as a nation to pay attention to how bad this problem really is, and particularly in rural areas, and recognize that the internet isn't a luxury, but an absolute necessity. Even during the pandemic, corporate internet providers managed to sort of keep people online, but they really failed to expand access when we needed it the most, which we were particularly impacted here in Montana. We here rank 50th in the country when it comes to broadband access, so that makes us dead last behind states like Wyoming and Alaska. Our residents here have truly suffered the most from limited broadband access, paying the highest prices for the slowest speeds. And this has really resulted in dramatically stifling people's ability to work from home, children to access distance learning, and impacted the operations and growth of businesses that require fast and modern connectivity. So our mission as a nonprofit 501c3 is to provide rural communities across Montana and the Pacific Northwest region in general with the tools and support that they need to solve their broadband issues on their own. So we provide a bottom-up community-powered solution that doesn't require the need for a national incumbent telecom to deem the community profitable enough to earn enough attention to gain the level of access that they need. So through our model, we can not only provide broadband service to these communities in need, but we can also create highly skilled, sustainable jobs that rural communities are in desperate need of and attract other outside economic stimulants. So improving this infrastructure is really key to our state's recovery in the pandemic and also to continue our economic development into the future. So let's first understand why traditional ISPs and their model is too costly and inefficient to provide broadband access to the areas that need it the most. So internet providers work on a centralized model where they spend immense capital burying miles of cable, wiring each home individually. Even current wireless ISPs rely on building or leasing centralized cell towers that are limited in range and heavily impacted by the geography around them. So that makes their networks both unreliable and extremely expensive and really require years to decades to ROI. So traditional providers also rely on large, complex, expensive billing and customer management systems as well as a large back office staff to operate and support these systems, which constitutes a very large part of ISP's total cost of operations. So we take a really entirely different approach that allows us to build profitable networks for communities that these major providers have largely ignored. So we use a proven technology actively being deployed in communities around the world, known as Althea, to build decentralized mesh networks that are entirely community powered. So on the surface, customers get connected and interact with us just like most any other ISP. They call us up to sign up. We schedule a time for installation, and once we arrive, we have them up and running in about an hour. But at the core of how we operate is where the significant departure and really an entire rethinking of the traditional ISP model occurs. So we start by sourcing a fast internet connection for our network from a wholesale provider. And then our service is built out from these fast fiber connections, one neighborhood to the next, by coordinating directly with the community to create a robust mesh network of customer-owned relays. These are just additional antennas on customers that customers opt to have mounted on their homes, businesses, or any other privately owned freestanding structures that provide those around them with fully secure and encrypted internet service. So customers are incentivized to host these relays by receiving a real-time revenue for providing service to their surrounding neighbors, which expands our ability to connect more customers. The more customers that host these relays, not only does our network grow larger and faster, but it also grows more reliable, with the ability to self-heal from individual relay failures without impacting customer connectivity. And then on the back end, our operations are further streamlined by a fully automated blockchain-based billing system and customer management system that reliably and equitably distributes customer service fees to each relay owner and to us for providing the network's primary connection. So this model allows us to build profitable networks where traditional providers have otherwise been unable to operate, making that market of 60 million people trapped in the digital divide accessible for the first time. So this Althea technology is truly revolutionary platform that is gaining quick adoption around the country and around the world. So to give an idea of the progress the Althea project has made so far, this map here shows 41 cities in the US and Canada currently building Althea networks with new networks that are coming online every month. Althea networks are even built out around the world in countries like South Africa, Ghana, Nigeria, and Costa Rica, proving that the technology can work in even the most economically disadvantaged areas. So why are these Althea networks growing in size and number so quickly? You can take a deeper look at the affordability and profitability of these networks. An Althea network can be started with as little as $30,000 compared to the bare minimum of $100,000 might cost to purchase a franchise wireless ISP, and not counting the cost of labor and other expenses. So to get a picture of the profitability of these networks, we can take a look at our Missoula network, for example. With the funding that we're seeking from this campaign, we'll be able to afford labor and equipment that will allow us to really rapidly scale out our network to meet the existing demand of the 550 customer pre-registrations that we received. And this investment will be able to ROI in as little as 10 months. So looking forward to 5-year revenue projections, continuing this level of sustained growth, connecting just under 2,500 households, which is equal to about 5% of total households, or 15% of households that currently are unable to access modern broadband service in Missoula County alone. This network will yield roughly $2 million in revenue. So these numbers are pretty stark contrast to the profitability of an Althea network compared to that of a traditional ISP, where networks take at least 5 to 10 years to ROI, let alone become profitable. So if we take a look at our organization's accomplishments so far, in January of this year, we began the soft launch of our flagship network here in Missoula, in the Grant Creek area to prove out the capabilities of the technology that we're working with. The network hit profitability with as few as 15 customers, and we have roughly 50 customers currently connected, and our service area covers roughly 400 households. We've refined our network so that we can scale to meet the existing demand and the potential thousands of customers in the Missoula and Bitterroot Valley that are currently cut off from broadband. We also have a high customer demand from people that just want a local alternative from companies like Spectrum that have maintained a stranglehold over most of Montana. Our network provides customers connections of 100 to 250 megabits equal download upload speeds. Customers who host relays receive speeds upwards of 500 megabits or higher. Our average customers are only paying between $50 to $70 per month. Light internet users really only paying $25 to $30, and large families and heavy users on average pay about $90 to $100 per month. So as you can see, with our service stacked up against other providers, we're capable of outperforming them with both speed and price. Not to mention that we're the only ISP that provides a community-owned, locally fully encrypted and secure network that pays our customers for contributing to its growth and operations. So while our main focus is in Montana, we do have, with our next network launching in the Mission Valley with already over 150 customer pre-registrations. We'll soon also be launching a network in Washington on Anderson Island, where we have over 10% of the permanent population of the island already pre-registered. So third, we have a really high demand that we've already generated for our service. Our continued growth is pretty much all but assured. And most importantly, this infrastructure that we build for these networks will ultimately serve communities that are most in need for broadband service. So with the funding that we're seeking from this campaign, we'll be able to accomplish 4 primary goals that will enable us to achieve the revenue projections that are shown here on this slide. That first goal will be scaling out our flagship network here in Missoula to meet the existing demand that we've already generated and continue to reach that goal of at least 2,500 customers within the next 5 years. Given the number of households currently lacking adequate service, which amounts to about 15,000 households just in Missoula County alone, combined with the number of customers who are eager for a local alternative, we believe that we're more than capable of meeting and likely exceeding that level of market penetration. Goal number 2, launch our second Montana-based network in Mission Valley. This area is particularly well suited for the type of network that we build because, for one, their broadband access is among the worst in the state, with the vast majority of residents stuck on obsolete DSL service. And B, the mostly flat terrain makes building out a wireless network incredibly easy, where we can cover miles at a time with our wireless technology. Goal number 3, launching our Anderson Island network in the Puget Sound in Washington State. So this is a network that we've been researching and planning for a long time. Their current internet access consists of highly limited, very slow and unreliable DSL access. And goal number 4, launching of a third Montana-based network by mid to late 2022. The location for this network has yet to be decided, but we've been in talks with several communities that would really make great candidates. The one thing that I particularly want to note about these projections is that they're calculated using the basic model of our Missoula network, where we're responsible for operating every aspect of the network, from sales and marketing to customer installs, support, upgrades, and all the logistical requirements of building and managing an ISP. So that brings us to a really exciting partnership that we have with Mission West Community Development Partners, that we're developing a model by which we can serve as the catalyst to assist Lake County in forming their own broadband co-op. So this co-op will be effectively an entirely autonomous organization from us. And so what that means is that we'll sort of help them jumpstart things by building a pilot network in Polson that the city of Polson has announced their support and desire for, that will provide a foundation for the co-op to continue building out from. And then we'll continue to provide them with engineering, operational, logistical training, and really any support that they need to ensure their success. So this means the vast majority of the boots on the ground work will be handled by the co-op itself, letting us focus on providing them the higher level of resources that they need to ensure their network's operations and the continued success of their organization as a whole. This also means that Mission Valley will not only receive benefits of improved broadband access, but the creation of a successful organization that can create sustainable and highly desirable jobs, along with other benefits for the local community. So our plan is then to take this model and replicate it with other communities, which will allow us to deploy more networks quicker, more cost effectively. Moving on to some other companies noted on this slide, we're also developing partnerships that will further our ability to accomplish things like developing green technology and solar-powered broadband infrastructure, developing ultra-long-range wireless networks for business and home automation devices and sensors, otherwise known as the Internet of Things, and advocate for community-based ISPs, universal broadband access, and digital rights. So that brings us to who are we and what qualifies us to build these networks? So we're a team of veteran ISP and network engineers with a combined 50 plus years experience working in the telecom and technology field. We've worked for companies like Sprint, building the first 4G networks in the country, built large scale networks for Amazon and their massive distribution centers, and numerous other Fortune 500 companies. So we've gained really firsthand experience over the years that's given us a unique insight into every detail of how our country's largest internet providers work. We know what makes them inefficient and all the ways they get away with charging high prices while delivering the lowest quality of service possible, and then how we can go about providing a better service for our customers. So in conclusion, the funding that we raised through this campaign will be instrumental in our ability to fully realize our organization's potential, meet our existing demand, and make a positive and lasting impact on Montana's rural broadband access. So I hope everyone's enjoyed my presentation. I encourage everyone to review our campaign page and take a look at what we hope to accomplish now and in the future.
Thanks, Elvis. Yeah, so I want to say after that, thanks, Elvis. That was a great presentation. And I really wanted Elvis to come on and give that pitch in his presentation as an example of how you might go about building a pitch or how you do over time, because we've worked with Elvis over the last couple of months to build up this pitch and refine it and so forth. But how do you go about taking your idea to an investor group like this? So in no way does Accelerate Montana endorse the Pacific Northwest Rural Broadband Alliance. We're not saying, hey, go invest with Elvis's company. Just saying, hey, as an example, here's how he's doing it. So,
but please do.
Yeah, that's for him to say.
Please do invest.
But for all of you keep your questions. I saw Christine, you had a question about the technology, but maybe let's keep our questions around why and how Elvis chose to use this type of capital raise as he did. So any questions around that rather than about his pitch at this point?
I mean, my quick, first maybe kind of answer some of those questions and we can move on to Broadband Montana.
Yeah.
So what was the question?
Well, I think I sent you a quick email to say, hey, maybe share quickly, why did you choose to use a crowdfund product?
Oh yeah, no, and I'd love to get to that, but what was the question about the technology real fast?
Oh, just is the Althea technology proprietary to you or not?
No, it is an open source project. So that's what allows all these network operators to develop these networks. We're not associated with Althea in like any sort of business sense. It's open source, free to use for anyone. So that's why we selected it. And we also specialize in a sort of wide variety of blockchain-based decentralized infrastructure projects, otherwise kind of dubbed Web 3.0, that are really driving most of the infrastructure development across the internet, and particularly applying to rural communities. Certainly people ask us, anything about why we chose Crowdfund Montana, which, I mean, I could give a little blurb, but does anyone have specific questions?
Yeah, people are nodding their heads. I just want Christina and Christine and others. Yeah. Mm-hmm. Okay. Yeah. Go. Yeah. Just maybe quick. And we only have 5 minutes, so maybe just in a minute or so, very briefly, why did you choose this model?
Yeah, I mean, there are a lot of really key reasons. I mean, first of all, I mean, we're a nonprofit, right? So, we don't. There's no opportunity for equity or for anything like that. Our sort of, we're capable of growing organically, but that would be a slow process. But through Crowdfund Montana, it allows us, a great opportunity to raise capital that we need to really rapidly scale out our organization and really fully realize that potential, but also just raise the profile of our organization and build relationships with local investors. As much as anyone can invest in our campaign, we also hope to make connections with some of those investors that may live in these communities across Montana lacking broadband and saying, hey, we need your services here. I'd like to invest in your campaign. And can you come to my community and build this service, or help us form a broadband co-op, or, help our local ISP, improve their operations. So it's that combination of easy access to capital that would otherwise be very difficult to raise, and also building those personal relationships and raising our organization's profile and awareness about who we are and what we do.
I actually would love to just a quick emphasis on that second point that Elvis made. That's one of the great things about investment crowdfunding, is that you are simultaneously conducting a really visible marketing campaign at the same time that you're raising capital. You are getting the word out, you're establishing brand recognition, you're getting your name out, you're building a lot of relationships and generating awareness. Even if people don't invest, they know that you're coming and they are ready to be supporters once you're launched. So that is a secondary kind of ancillary benefit to raising capital this way as well.
Yeah, and I would argue, almost potentially equally as valuable as the capital potentially. So yeah, direct questions.
Yeah, any questions out there? George, you've been on kind of quiet. Give you a chance to unmute if you want.
I guess, how have you felt the process has been? Was there a steep learning curve to using it all?
Right. Well, so I'll say, this is my first experience going out, trying to raise investor capital. So I knew nothing about it, right, to go into it. That's also another reason why we chose Crowdfund Main Street and Crowdfund Montana and work with Andrew and the Center for Community Ownership, is because they really walk us through the entire process. There's a run book for how to take it from like how to put together 5-year revenue projections, how to put together a pitch and slide deck, how to decide or who to target, how to target investors. The whole process, they have really nailed down to a, like a 20-step process where you follow, 1, 2, 3, 4, 5 through 20, and at the end of that, you have a campaign that you can feel confident about, learn through that, and then also, they provide that guidance and support all the way along the process from launching the campaign to running the campaign, to success. So yeah, that's hugely valuable. That's something that otherwise they wouldn't have access to that type of resources.
Yeah. Any other questions?
I have another question. So what, I guess, what would you say is your average investment on the
well, so I don't know, Andrew, can I say that? I don't know if I can say that. The SEC might not let me say that.
Let's err on the side of not saying that. I think
Okay.
that I think that the
Right. So the SEC
there's a minute, you set a minimum investment amount. So the
Right.
minimum amount that you can set. So that's one thing that could shape
Right.
that.
And
also
so I could say, so, through, these campaigns are entirely customizable. So, so you set a minimum investment. You also set a minimum goal that you need to raise. Like, hey, if I don't raise at least this much, it's really not worth it to me. You set a maximum goal of saying, I don't need any more than this. And then you also, could set milestones, by which, saying like, beyond our minimum, once we raise this, this is our next milestone, and you get access to those funds once you reach that. So we don't have to wait until the end of the campaign to have access to that funding. Assuming we can reach our minimum, in a short period of time, we immediately get access to that. And then again, with our next, milestone, we reach that, get access to that, and then whatever's remaining at the end of the campaign, then we get access to that. So.
And I'll say this, Christina, I think it's just, it's very situational. I think just most campaigns have the experience where there's some combination of, depending on the build out of their network or the nature of what they're doing or the nature of their campaign, some combination of a bunch of small and medium investments and maybe a couple of larger ones, because accredited investors can invest through investment crowdfunding as well. And they have higher, limits that they can go through. So there's usually a significant range between the sort of like minimum investment and the higher one, but it's totally dependent on the campaign.
Right. And then it's like, what the really kind of cool part about it is, so, we have that minimum investment, we've generated, before we started our network, we did a pre-registration campaign to judge the type of demand that exists in Missoula. And, if we even just had, like 400 of our, of our pre-registrations, make this minimum investment that's very attainable, this very reasonable sum, we'd be able to hit our minimum right there. So, I mean, just through those small investments, and then, that, raising that sort of awareness and social support of our mission, also can help attract the attention of potentially larger investors that say, oh, wow, like, I mean, all these people, that don't have a huge amount of money to invest, they chose to invest in this. This is something that looks like it has a real future. So, I mean, I just think there's all these, all these sort of elements of it that make it a really, really great, great opportunity for businesses, particularly mission-aligned businesses, to have access to capital that they just otherwise wouldn't be able to raise.
Thanks, Elvis.
Mhm.
Hey, we just 2 minutes past 1 o'clock, so I'm gonna have to jump off to another meeting here shortly, but one more question? Anybody?
I put my email in the chat, so if anybody has further questions or wants to do any follow-up, more than happy to talk, so don't hesitate to reach out.
Yeah. And I would also just like to, follow up to say, please do visit Crowdfund Montana, take a look at our offering. Please do invest, if you can, and if you're interested in scheduling, a meeting where you'd like to know more details, or just generally spread the word, we're very easy to contact directly. So please don't hesitate to reach out and ask any questions or reach out for an individual one-on-one meeting.
And huge thanks to Carl and AMRII for hosting
Yes.
us. Thanks for putting this together, Carl.
Yeah, Accelerate
Great.
Montana has been great for us this entire from the beginning. So we really appreciate that.
Thanks, Andrew. Thanks, Elvis. Appreciate it. And thank you very much for being on, sharing the information you have and being willing to sort of field questions offline as well. So thank you all for joining for another one of these. If you have any thoughts or ideas of topics you'd like us to take up, like maybe we bring some bankers on and talk about, hey, bankers, if you want to do this, folks want to do a crowdfund Main Street deal and banking financing, what does that look like? So maybe we'll take that up. But any other ideas, send them our way. We're happy to put them on air and bring people to talk about them. So thank you again for joining. Have a delightful week, and we'll see you next time. Bye for now.
Thanks,
Thanks, guys.
Carl. Thanks, everyone.
Thank you.